Good day everyone, I am Pondon Divine Grace. Together with me are Papalid and Refan Mae. For today's video, we will be talking about tax evasion and tax avoidance. We will also know how to compute tax and answer the question on why is tax evasion ethically wrong.
So we have here first is tax evasion. Tax evasion means concealing income or information from tax authorities. Tax evasion is a legal action in which a individual or company to avoid paying tax liability. It involves hiding or false income without proof, inflating deductions, not reporting cash, transaction, etc. Tax evasion is a serious offense, comes under criminal charges and substantial penalties tax. Tax evasion is the illegal evasion of taxes by individuals, corporations, and trusts. Those caught evading taxes are generally subject to criminal charges and substantial penalties. Second one is tax avoidance. Tax avoidance means legally reducing your taxable income. So, tax avoidance is any legal method used by a taxpayer to minimize the amount of income tax owed. Individual taxpayers and corporations can use forms of tax avoidance to lower their tax bills. Tax credits, deductions, income inclusion, and loopholes are forms of tax avoidance. These are illegal tax breaks offered to encourage certain behaviors, such as saving for retirement or buying a home. So we have here is tax evasion. Tax evasion means an illegal practice of a person or corporation that intentionally avoids paying his true tax. So, to determine tax evasion, that agency must be able to show that the avoidance of taxes was willful on the part of the taxpayer. Tax evasion can be either the illegal non-payment or underpayment of actual tax liabilities due, is failing to pay tax owed. Some examples include failing to report income or providing false information about deduction. The fourth one is we have tax avoidance, legal arrangement of a business financial activities in order to lower the tax liability. So, it's minimizing your taxes using provisions in the tax code. An example might be deducting retirement contribute from your earned income before paying taxes. If you sell an investment that has lost value, you can use that loss to offset other income. Donating to charity can decrease your annual tax bill if you itemize your deduction. So we have the last is tax evasion is unscrupulous government officials. And then the tax avoidance is accountant, lawyer, or financial manager.
What is tax evasion? Tax evasion happens when a person intentionally avoids paying any tax under the tax code of the Philippines. Because tax evasion is criminal offense, tax evaders are subject to serious penalties and criminal charges. The example of the tax evasion is understatement of income, overstatement of expense, false or fictitious entries in books. What is tax avoidance? Tax avoidance is the use of tax-saving devices within the means sanctioned by law and where the taxpayer acts in good faith and at arm's length. The example of the tax avoidance is moving capital or labor to areas or countries with lower tax rates, manipulating the tax parameters through the legal means. We're going to talk about computing the tax. What is computing the tax? Computing the tax is a systematic presentation of all incomes, exemptions, rebate, reliefs, deduction together with calculation of taxes known as computation of total income. I'm going to show the example how to computing the tax. Computing the tax, you have taxable income. The income is 25,000 pesos because you are a teacher, example, your monthly salary. And allowable tax deduction is that your expenses is 12,500 is considered the groceries, bill payments, and also your jeepney fare for monthly. The income subject to tax is we're going to compute that one. From your 12,500, you're going to deduct the corporate tax rates of the Philippines is 30%. The 30% is 3,750 equals 8,750 pesos. What is taxable income? Taxable income is defined as gross income less allowable tax deduction. The example of taxable income is net sales, interest income, rent income, business income. What is non-taxable income? Non-taxable income, you do not have to pay tax on it. This portion of your income is non-taxable. The example of non-taxable income is gifts and inheritances, life insurance proceeds.
Paying a fair amount of tax in the countries in which they operate is seen as a responsible thing for a company or an individual to do for the social good, providing the funds for public services such as healthcare, education, and for public investment in infrastructure, be it in the developed or developing world. Hi, I am Pondon Divine Grace, and now let us know why is tax evasion ethically wrong. Tax evasion compromises the purpose of taxation, which composes of peace, security, and just distribution of wealth. It also disobeys the government. It disobeys the law and the leaders. To better understand the ethics at hand, it would be instructive to evaluate the differences between tax evasion and tax avoidance. Tax evasion is illegal. It consists of the willful violation or circumvention of relevant tax laws to minimize tax liability. Tax evasion generally involves the deliberate underreporting or non-reporting of receipts, false claims to deduction, or both. From a legal perspective, this conduct is easily recognized. The taxpayer has breached a relevant law amounting to criminal fraud. On the other hand, tax avoidance is not illegal. It is simply taking advantage of the legal opportunities and loopholes in the system to minimize one's tax liability. This requires contriving transactions and structures that reduce tax in ways that are contrary to the policy or spirit of the legislation. The transactions and structure includes the use of state planning, businesses, and tax haven and tax shelter to generate losses that are offset against ordinary income and reduce tax liabilities. Avoiding tax by bending the rules of the tax system is not illegal, but it is seen by many as operating within the letter rather than the spirit of the law. Countries set out in laws how their taxes should apply. Businesses are expected to pay their taxes due under the law. The issue falls into the realm of ethics because businesses have a choice about their approach to interpreting the law and hence paying taxes, while remaining legal in all it does. Where a business draws its ethical line regarding how to interpret tax law and arrange its affairs is subject to a good deal of discretion. This can extend to where it pays its taxes. Tax avoidance has been branded by some as an immoral and unethical practice that undermines the integrity of the tax ethical. Now let us closely examine it using two different approaches. According to the utilitarian approach, to determine whether a tax avoidance is a kind of conduct ethically right or wrong, it is necessary to evaluate the amount of utility or disutility it brings to the taxpayer, the state, or the society. Using the utilitarianism approach, the ethics of tax avoidance depend on the specific state where tax avoidance is supposed to happen. If the state tends to perform well with the tax revenue, tax avoidance is wrong, because this revenue will bring more utility to the society, even though the taxpayer will lose some utility. On the other hand, if the state manages tax revenue in an undesirable way, the utility created for the taxpayer will overcome the little disutility generated to the society. Using this arrangement will result in the presence of more utility and therefore an ethical behavior. On the other hand, for the deontology approach, in examining this formulation, this maxim is an undesirable situation because if all taxpayers reduce their tax liabilities by using a tax avoidance scheme, the total revenue received by a state will decline significantly, forcing the state to act harshly against this situation. For instance, this response can go from increasing the extent tax amounts to creating new taxes to support the obligations. Apart from this consequence, if all taxpayers reduce their liabilities, no one will have competitive advantage, demonstrating that the scheme fails in benefiting any market participant. As a result, applying categorical imperatives over the tax avoidance maxim brings the particular taxpayer and others to a situation equal or inferior than before, which denotes that this is not a rational maxim and thus not an ethical action. We can all infer from this information that tax avoidance is not legal. However, we can question whether or not the deduction generated from the losses are genuine. This then begs the question, are this action ethical? The public expects the wealthy to pay their fair share of taxes. It is a socially responsible thing to do. However, the reality is the burden of paying taxes falls unfairly on middle and lower income taxpayers who play by the rules and pay their fair share. It shows equity and virtue on the part of these taxpayers, as opposed to the immoral and unethical practices of some that undermine the integrity of our tax code. And that concludes our video for today about tax avoidance and tax evasion. Thank you for watching.